Nigeria's external reserves fell to $37.7 billion as of October 18, 2022, according to data from the Central Bank of Nigeria. This is the lowest level recorded this year. The country's forex market is facing demand pressure at the black market, where forex is trading unofficially, with the naira falling as low as more than 800 naira as at Thursday. In just 10 months, the nation's foreign exchange buffers are depreciated by $3.13 billion, or 7.73% of the $40.5 billion to $37.39 billion as of October 31st, 2022. Analysts have attributed a decline in external reserves to increasing interventions by the central bank in SMRS and investors' exporters window to stabilize the naira exchange rates, lamenting the dwindling inflow from crude oil, amongst others. Well, let's discuss this further with the Director of Research and Strategy at Chapel Hill, Denham, Mr. Tajuddin Ibrahim. Thank you so much. Finally, we're able to have you in, Mr. Ibrahim.
It's my pleasure.
What are you thinking, or what came to you when you saw that report saying that our external reserve is still dwindling? One way or the other, this is quite significant. What is responsible for this continuous decline?
I think the major thing to bear in mind is that we have not really seen much in terms of crude oil production, and the fact that we haven't seen that production level of around 2 million barrels per day is an indication that Nigeria will be generating much lower oil inflows in terms of foreign exchange, and that wouldn't allow the FX reserves, to increase over time. That is the major challenge that we currently are facing as a country. If we consider crude oil prices globally, we will, agree with me. You will agree with me that we have those prices at, very good levels, and we should naturally have been benefiting from the, global rally in prices that we saw that have been in place for 3 to 4 quarters as we speak. But just because our production level is extremely low, far below 1 million barrels per day, that is why we are currently in this situation. And we cannot really go out to borrow. The economy is also not growing much to attract, foreign investors into the country to bring in either foreign portfolio investments or foreign direct investments. We have global interest rates elevated as we speak, and that is also another discouragement for the government to consider, borrowing from the debt market. So those are the reasons that, we are seeing, a fall in our FX reserves, down 2% month on month in the month of October. And I think it is natural for it to fall because the CBN just has to support some key businesses by supplying foreign exchange to them. Those are our views at Chapel Hill, Denham.
Now you're talking about CBN having to meet the forex need of some particular sectors. I think one should be manufacturing. Of course, the aviation sector, they've come out to say that this is eating deep into their business, while some are even saying they're coming and flying en route Nigeria until these monies are paid. And on the black market or the parallel market to the official exchange rate, the disparity at the moment is like 100%. Where do we go from here? Yeah. And some say it might continue to worsen if the situation remains like this.
So to be honest with you, in my view, this situation we have found ourselves, to my mind, is not a surprise to me, because I already envisaged that Nigeria probably is going to see 1,000 naira to $1 at the parallel markets. Two key reasons for that. Number one is that the CBN does not seem to recognize the borrow the change operators in the market. Number two is that the CBN is unable to supply to the wider market, so that there will be little or no need for Nigerians to go to patronize the borrow the change operators. So these are the two key challenges, and I think to address those challenges, the CBN just has to take an action. And I think the CBN should also be able to manage communication and also the actions that they want to take to make the economic better. Because such communication in recent quarters have been misunderstood and misinterpreted by the market. For instance, the last time they talked about currency redesign, after that announcement, we saw many Nigerians going to speculate on the naira to dollar, exchanging naira, for dollar. So that kind of a communication, I think, in the future should be well or better managed, by the CBN. The currency can get worse at the parallel market over the next, 2 to 3 months, but there are a bit of expectations around, December festive period that, there'll be some inflows as, Nigerians abroad travel down, to the country to celebrate with their loved ones and families. So chances are that, we could see a bit of a relief in that regard. But indeed, my sense is that if the CBN does not do anything tangible, the rates can get worse from the current levels.
That's talking about the planned redesigning. And my guest yesterday told me that the timing is the issue, and that could cause a little bit of apprehension and all of that. That on one side, do you think that it is timely enough to go ahead with that, considering the fact that we grapple with a lot of things, a lot in the plate for us to grapple with? Inflation is there, high cost of energy. We know what's happening all across board. Which do you think are we not getting our priorities right at this time?
So I absolutely agree with you, and also with your guest yesterday. It is a good policy to my mind, but I do think that the timing is not right, considering the developments that we have seen afterwards. Let me throw a bit more light from a global standpoint on the currency redesign. This is not the first country that will be talking about currency redesign. We have seen, some other countries in the past execute, that kind of, idea. And, to some of them, they are reaping the benefits. The central banks over there are better able to manage, the currency in their circulation. Let us take India, for instance. India, had their currency, redesigned in 2016. So there were glitches at the beginning, but much at the end, they had what we can call an economic better result. Let me put a ratio to this. Before India redesigned, they had 86% of their currency in circulation was outside the banking sector. The moment they redesigned, as we speak, currency outside the banking sector for India is at around 14%. In the US, it is as low as 11%. We have in Malaysia as low as 7%. And in Nigeria, the currency outside the banking sector is 83% of the entire currency in circulation, which means that the CBN most likely is looking at those other countries to ensure that we have a much lower ratio of around maybe 10 to 15% as the maximum. Good policy. It allows you to control your currency. It allows you to track any kind of crime. It allows you to do a lot of things around digital strategy for your currency, but the timing is a problem in my view.
Now, experts have talked about emerging global liquidity crisis at this time. What is that? And I want you to, what is it like to go through liquidity crisis? Is it likely to also hit us hard here, Africa's most populous nation?
So if we talk liquidity and we partly link that to the naira redesign, one thing that comes to mind very quickly are the challenges that Nigerians are going to face in the very short term, because there will be scarce liquidity for cash in terms of talking about the naira over the short term. By the time just before they begin to print and then they begin to circulate and you begin to have, the cash in your hands, there'll be tightness in liquidity on that front. That is talking about currency note, and my mind tells me that Nigerians should get ready for that, but it will just be for a short time. The second element to my mind around liquidity flows is that we have a monetary policy stance that is in a tightening mode. When you have tightening monetary policy stance, liquidity flow in the financial system will be extremely low. And that is one thing that Nigerians should also prepare for. It will be positive if you are an investor in bonds, or you're an investor in money market instruments. But if you are in need of cash, it may be a negative thing for you, because you wouldn't really come by such cash. The only thing that you would then depend on are electronic channels for you to do transactions. So liquidity squeeze or reduction in liquidity is something that Nigeria is going to face, in as much as we have tight monetary policy stance by the CBN.
All right. Earlier on the show, I spoke to one of the assistant spokesperson of the APC, talking about economic agenda and all of that. Now, generalizing this, I want to ask you, how realistic, or what do you think should be the short, medium, and long-term projections of whoever becomes the CEO of Africa's most populous nation by 2023, considering the challenges that we face? Don't forget, you started with the global headwinds. You talked about that too, that we also face, and we are not insulated from that. What can be these quick wins for the country?
Well, I think the starting point, to my mind, for in the new or the incoming administration is for them to look around infrastructure. We have the federal government, as well as the Central Bank of Nigeria, and some money managers, or let me say asset managers in the country, that have been selected for InfraCorp to manage that fund that will be invested in infrastructure. I think that one is a low-hanging fruit. They can start from there, where the government will be able to utilize the little capital they have put in place for InfraCorp, and then the money managers, or the asset managers in this case, can approach the private sector to raise funds to invest in infrastructure in this country. We can do that, and I think it's a low-hanging fruit. By the time the new administration comes in, that is doable, not beyond the first quarter of next year. We'll begin to see the impact on the economy. By the time we have funding available for power sector, available for transportation, available for maritime, available for these other sectors that are drivers of economic growth. I think that's one thing in my mind is a low-hanging fruit, because it has reached an advanced stage. What they just need to do is to complete it, in my view.
Well, I think I want to stay with FX while we wrap up this discussion. During talks with major oil marketers and, of course, depot owners, they've all talked about some payments being made in dollars to NIMASA, to NPA for all of this, the vessel movement. I'm worried. Why can't some of these payments be made in naira? Maybe it will help ease up. And also, if we begin full in-country production of PMS, that's crude oil to PMS, refining, do you think this can also help reduce this pressure on the FX space?
So let me start with your second question. The answer is yes. By the time we begin to refine locally, talking largely speaking about Dangote refinery in this case, there are very strong chances that the foreign currency element of our PMS, the premium motor spirit, is going to disappear. And by the time that disappears, we should have some ease in terms of the impact of FX on fuel prices in the country. The second element that you talked about is, if we look at the foreign currency market, and I think I seem to have lost you on the first one that you said.
Oh, okay. There were two questions. I was talking about building investors' confidence with all of this forex headache, and on the other side is how it affects manufacturers and oil marketers. They are saying that they are making payments in dollars to some of the government agencies. Can't they simplify that?
So it can be simplified, and I think it has been done in the past. If we
Okay.
track events back about 12 months ago, we had this challenge as well, where the government agencies were demanding for dollar payments by from the oil marketers. But eventually there were several meetings, and then they came and decided that they should be paying in naira. So my sense tells me that that most likely is also going to play out this time. And they have to just take naira, considering one, the fact that we are in an economy where we spend naira. Two, the foreign currency they are even asking for is very scarce this period. So I think they are going to probably be at a table, decide, and take naira from the oil marketers. Those are my views.
Brilliant submission, as usual there. I've been speaking to Mr. Tajuddin Ibrahim. He is a director of research and strategy with Chapel Hill Denham. Thank you so much for spending your afternoon with us. We really do appreciate this.